Welcome to The Long and the Short, a show where you can expect an honest take on trading, something you won't hear elsewhere. I'm your host Sandeep Rao. If you've been watching our weekly market metrics video, you probably heard me talk about seasonality. Almost every month I mention it. That is how the index tends to behave around a certain time of the year, a certain month. And I suspect some of you would have wondered what that actually even means and whether there is anything to it. Now in that weekly video, I only look at seasonality on the benchmark, that is Nifty 50. This time around, we are going to take one level deeper, from index to the individual stocks. But what exactly is seasonality? Is it real or is it just a pattern which only I see? And if it's real, can we actually use it to trade? And yes, this one also ties back to the swing trading episode we did a while ago, where the whole idea was to pick the strongest stock from the strongest sector. The same logic runs here as well. Seasonality just becomes another lens on the same question, another way of figuring out which stocks tend to be strong in a given month. And I'll be honest with you, once I started pulling the data, I found a lot more than what I expected. Tons of interesting data-driven observations, and I think you're going to enjoy digging into them as much as I did. So that's what this episode is all about. Seasonality in Indian stocks, what it is, whether it holds up, and whether it's something you can actually trade with. So without further ado, let's get started. Before I start, here's the usual disclaimer. The examples and ideas shared in this episode are strictly for educational and illustrative purposes only. Nothing discussed here should be construed as a recommendation, investment advice, or a solicitation to trade. Trading in stocks and derivatives involves significant risk and can result in complete loss of capital. The examples and data presented are meant to explain market behavior and not to suggest that similar outcomes will occur in the future. So before we get into any of the data, we need to understand what does seasonality even mean. Now seasonality is the tendency for prices to behave in a certain way at certain times of the year. The same month showing up the same way year after year. Often enough that we start to notice a pattern. Think of it like this. If you looked at a stock every March for the last 10 years and it closed higher in 8 of them, you start to wonder, is that just luck or is there something about March that keeps working in this stock's favor? That's seasonality. And it's not a new idea at all. Back in 1942, an American investment banker and stockbroker named Sidney B. Watchell was among the first to write about it. He noticed that US stocks tended to do unusually well in January, year after year. That observation eventually got a name, the January effect. And years later, in 1976, two academics, Rossif and Kinney, tested it properly on 71 years of NYSE, that is New York Stock Exchange data from 1904 to 1974. Their finding was high January returns showed up across every time period and every statistic they measured. So why January? Wait a bit and I will tell you a little later in this episode. So yes, people in the industry and academia have been documenting this seasonality phenomena for over 80 years, at least for the US markets. But as with everything in the markets, a tendency is not a guarantee. Seasonality tells you which way the wind has blown before, but it doesn't promise it'll blow the same way again for sure this year. That small caution aside, I thought why not check if seasonality shows up on Indian markets, Indian stocks specifically, and what I found would blow your mind. So get your coffee or tea and maybe a notebook as well. One last thing before we get into the data. Here is what and how of the test we did. So for every month of the year, I wanted to find the subsectors with a real seasonal tendency. The first decision was to find what to run the test on. I went with the Tijori indexes, equal weight and not the market cap weighted ones, the same 80 subsector baskets we track in our weekly market metrics. And the reason is specificity. The more specific the basket, the cleaner the seasonal signal. You see, a broad index like Nifty Auto blends two-wheelers, OEMs, ancillaries, each may be with its own seasonal signature, and those patterns can cancel out each other or muddle the outcomes. If we go finer down to the subsector, the pattern has more room to show up. But you can take that specificity too far and go all the way down to a single stock, and you are no longer measuring a segment or sector. You're possibly measuring a company's quirks, maybe that is. So the Tijori indexes sit in a sweet spot, specific enough to catch a pattern and broad enough that no single stock skews the signal. The look-back period is 5 years, 2021 to 2026. With the universe settled, the next question was to decide what to measure. I use two metrics. The first is dependability or win rate. For every sector in every month, I looked at the win rate, how often it closed that month in green. The data runs for roughly 5 years, so I set a minimum at 80%. The sector had to be up in at least 4 of those 5 years. The second filter is return over baseline or monthly average returns. We measured if the sector went up by more than what it normally does in an average month. Every sector has its own baseline, its own typical monthly average return. What I measured is how far a given month returns above that sector's own baseline. So for each month, I take the sectors that clear the dependability bar, that is up in at least 4 out of 5 years, and rank them by how far that month beats its own baseline. We keep the top 5 sectors for reference, and if nothing clears the bar in a given month, we leave that month empty. So let's start with January. January gives us 4 subsectors: upstream, auto OEMs, microfinance and defense. Now, the unfortunate part is that the numbers don't really tell a story. Now, if you ask me why upstream shows up in January, most of them are oil and gas PSUs in India, I really don't have answers. It's just upstream which holds the bar for Jan. Others just show up because of the win rate and not because of returns over baseline, so I'll ignore them. Now moving on to Feb, well, I think it's a month to plan a vacation. As you can see, nothing shows up here. If you ask me why, well, I really don't know. March is also a lean month with nothing much except for 2 sectors: sugar and solar panel manufacturers. Solar shows up maybe because some sort of commissioning rush, as infra and capex project raised to get commissioned before March 31st for the books and incentives. Sugar may be a seasonal agri play, as October-April is the crushing season. I'm just taking a wild guess. Now we have April, the big one, and yes, India's answer to the January effect. This is the strongest month in the whole dataset and is the direct analog of the US turn of the year effect. A new financial year resets everything at once. New FII, DII, allocation budgets maybe, SIP flows resume in force, budget uncertainty is resolved. More than anything else, fresh buying resumes after all the tax loss harvesting is done in March. So a wall of fresh money arrives in April. Just the way it works in the US for Jan, because that's their tax year turn, India gets it in April. 75 out of 79 sectors show up in positive in April. So you can pretty much invest in any stock or any sector in April and you are good. The odds of you being fooled in April are actually quite low. Now moving on to May. May is peak Q4, full year earnings, and the capital goods and the industrial names, bearings, wires and cables, which maybe report full year numbers and refresh their order book guidance. It could also be April's capex momentum being carried forward, but looks reasonably solid for the industrials at least. As I said earlier, don't read too much into my reasoning. Moving on to June, well, after April, June is the second strongest month. I'm thinking monsoon has its effect and the building material stocks, tiles and especially plastic pipes see some pre-monsoon demand uptick. Pipes in particular are a genuine agri-rural infra-seasonal. The industrial names, bearings, communication equipment could be some capex thing continuing. On a different note, monsoon reminds me of the song Dekho Barish Ho Rahi Hai by Anu Malik. But let's not stray from the topic. Moving on to July, another strong month. With the monsoon in full swing and construction perhaps slowed, things get defensive and consumer staples show up. Paints perhaps get a pre-festive restocking lift here, maybe. To me, it looks more like April itself, as almost everything shows up here. Well, if the macro experts amongst us know what's really happening in July, please let me know in the comments. Talking about August, well, the festive season begins. Onam, Independence Day sales and pre-Diwali channel stocking maybe, which seems to be pulling consumer and retail sectors forward while aviation catches holiday travel. Genuine consumption seasonality month the way it looks like. So what do you people say? Moving on to September, it's another real economy story after April. Jewelry is a standout, easy to guess. Navratri, Dashara, Diwali, gold buying, plus the wedding season kicking in is textbook stuff. Others, EMS and power, you people need to help me out. Moving on to October, well, Diwali consumption and Muhurat buying peak and Q2 results month. I cannot really see anything else happening here. Moving on to November, well, it has a solid anomaly, especially for IT years and large cap IT. One big driver could be the US tech's own strong November-December seasonality and the deal signing ahead of clients' next year calendar budgets. But it's something really strong. Moving on, there could be some reasoning for diagnostics and hospitals as well, but I really cannot pin that. Over to December, well, other than fertilizers, IT, Alcobev and railways, I cannot point to what could be the drivers for something like solar panel manufacturers in December. But yes, it is what it is. And finally, I want you to see how each of the months fares in terms of its own win rates. What April shows is that 75 out of 79 sectors have greater than 80% of the year's positive, and the next best month is June and then July and then September with a minor spike around December. So if you were to ask me, I think if I were to look at seasonality as a filter to invest, one should probably invest at the end of March, hold all the way till December and then exit. Maybe, I'm just thinking wild. The other way to look at it is if you are a swing trader using seasonality as a filter, then you just have around 5 months to play with. The rest of the months you shouldn't actually be trading. Lastly, looking at Feb, I'm getting some more ideas, but that's for another episode. So yes, that brings me to the end of this episode on seasonality in stocks in India, and I hope you found this episode useful. Personally, I learned a fair bit about how the January effect of the US shows up in April in India and how bad Feb is for the whole market. As always, if you have any questions, feel free to drop them in the comments. I'll be more than happy to respond. Till then, take care and trade safe, and I will be back with the next one.